Bitcoin has been one of the most talked about investments over the last decade. From its creation in 2009 by the mysterious Satoshi Nakamoto to reaching record highs in recent years, Bitcoin has captured the attention of both individual investors and large institutions. Many people wonder if it is still worth buying Bitcoin today, especially with market volatility, regulatory changes, and new cryptocurrencies emerging constantly. The truth is that Bitcoin remains a unique digital asset that offers potential rewards but also comes with significant risks. In this video we will explore whether Bitcoin is still worth buying, counting down from number 10 to number 1. We will discuss its advantages, risks, long-term potential, and factors you should consider before investing. Make sure you watch until the end because the number 1 point is the key insight that can help you make a smart decision about Bitcoin. 10. Bitcoin is the first cryptocurrency. Bitcoin is the original cryptocurrency and has been around longer than any other digital currency. Being the first gives it a strong advantage in terms of recognition, adoption, and market presence. People trust Bitcoin more than newer cryptocurrencies because it has proven resilient over time. Its network is secure, decentralized, and widely accepted in the crypto community. While new cryptocurrencies emerge every day, Bitcoin's status as the first digital currency gives it an enduring reputation that contributes to its long-term value. 9. Limited supply creates scarcity. One of the main reasons Bitcoin is attractive to investors is its limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is built into its code and cannot be changed. Unlike traditional currencies, which governments can print at will, Bitcoin's supply is fixed. Scarcity can increase demand over time, especially as more people and institutions recognize its potential as a store of value. Many investors compare Bitcoin to digital gold because of this limited supply and its potential to preserve wealth. 8. Decentralization reduces control by governments. Bitcoin operates on a decentralized network, meaning no single government or institution controls it. Transactions are verified by a network of computers around the world, making it resistant to censorship and centralized control. This feature appeals to people who value financial freedom and independence from traditional banking systems. While decentralization adds security and transparency, it also means that Bitcoin's value can be influenced more by market sentiment than government policy, which can cause volatility. 7. High volatility can create opportunities. Bitcoin is known for its price volatility, which can be both a risk and an opportunity. Its price can swing dramatically in a short period of time due to market news, investor sentiment, or regulatory changes. For traders and investors who understand market dynamics, volatility can create opportunities to buy low and sell high. However, beginners need to be cautious because sudden drops can lead to significant losses. Understanding and preparing for volatility is essential before investing in Bitcoin. 6. Adoption by institutions is growing. Over the past few years, more institutional investors and companies have started adopting Bitcoin. Some large corporations are adding Bitcoin to their balance sheets, while financial institutions are offering Bitcoin-related services. Increased adoption by trusted institutions adds credibility and could help stabilize its price in the long term. Widespread acceptance also increases liquidity, making it easier to buy and sell Bitcoin. Investors often view growing institutional adoption as a positive sign for Bitcoin's future. 5. Long-term potential for growth. Despite short-term volatility, many experts believe Bitcoin has long-term growth potential. It is still in the early stages of adoption compared to traditional assets like stocks or gold. As technology, infrastructure, and regulations improve, Bitcoin could become more widely accepted for payments, investments, and store of value. Long-term investors who believe in the fundamentals of Bitcoin see it as a way to hedge against inflation and participate in a new financial system that is digital and decentralized. 4. Risks of regulation and government intervention. While Bitcoin is decentralized, governments around the world are starting to regulate cryptocurrencies more strictly. Some countries have banned or restricted Bitcoin trading, while others are creating clear regulations. Regulatory changes can significantly impact Bitcoin's price and availability. Investors need to stay informed about global policies because sudden government actions could affect their investments. Understanding and preparing for regulatory risks is crucial when deciding to invest in Bitcoin. 3. Security concerns and storage. Bitcoin is stored digitally, and securing it properly is essential to prevent theft or loss. While the blockchain itself is secure, hacks, phishing attacks, and lost private keys can result in permanent loss of funds. Many investors use hardware wallets or reputable exchanges with strong security measures to protect their assets. Being aware of security risks and taking proper precautions is a critical part of investing in Bitcoin safely. 2. Diversification and portfolio strategy. Before investing in Bitcoin, it is important to consider how it fits into your overall investment portfolio. Bitcoin can be a valuable addition as a hedge against inflation or as a growth asset, but it should not be your only investment. Diversifying across different asset classes like stocks, bonds, real estate, and other cryptocurrencies can reduce risk. A well-balanced portfolio allows you to participate in Bitcoin's potential gains while protecting your overall wealth from extreme market swings. 1. Invest only what you can afford to lose. The most important principle when investing in Bitcoin is to only invest money that you can afford to lose. Bitcoin can provide high returns, but it also comes with high risk. Market crashes and sudden price drops are common. By investing only disposable income or a small portion of your portfolio, you protect yourself from financial stress and emotional decision-making. This principle is essential for both beginners and experienced investors and ensures that your investment in Bitcoin remains a strategic choice rather than a gamble. So, is Bitcoin still worth buying? The answer depends on your financial situation, risk tolerance, and long-term goals. Bitcoin remains a unique digital asset with potential for growth, scarcity value, and increasing adoption, but it also carries risks such as volatility, regulatory changes, and security concerns. The key is to invest wisely, educate yourself continuously, and make sure you only use money you can afford to lose. If you approach Bitcoin with knowledge, discipline, and a clear strategy, it can be a valuable part of your investment portfolio. If you found this video helpful, make sure to like, subscribe, and continue learning about smart ways to grow your wealth in the evolving world of cryptocurrencies.